So you've heard a little bit about Caitlin already, but let me go through this so that those of you who weren't here earlier can hear that Caitlin Long is the founder and CEO of Custodia Bank, serves as the honorary chair of the Wyoming Blockchain Stampede. A Laramie native who graduated from the University of Wyoming in 1990. She went on to earn her JD from Harvard Law School and her Master of Public Policy from the Kennedy School of Government in 1994. Caitlin's impressive career spans Morgan Stanley, Credit Suisse, Salomon Brothers. She became involved in Bitcoin in 2012 and was named Top Banking Innovator for 2023 by American Banker. But what really truly makes her special to Wyoming is her dedication to our home state. In 2017, when a flaw in Wyoming blocked her from donating appreciated Bitcoin to endow a scholarship for female engineers at the University of Wyoming, she didn't just accept it. She volunteered to help fix the statute, and that led to her helping spearhead a multi-year initiative to make Wyoming an oasis for blockchain companies in the U.S. In 2018, Caitlin helped kick off the first Wyoming Blockchain Stampede and WYO Hackathon, and she continues to serve as our honorary chair today. From 2018 to 2020, she led the charge to help Wyoming enact more than 30 blockchain-enabling laws.
56. Yeah. It's his fault.
That's more than 30. Making our state the leader it is today. May everyone please give a warm Wyoming welcome to our own Caitlin Long.
Thank you. Thank you. I'm going to stay seated if that's okay. Before I dive in, though, I do want to give a special shout out to my grade school friend who sent me this jewelry here in Laramie. We grew up together. And I think it's her cousin who has a jewelry business, and it's Bitcoin on the front and a lasso with with WY on the back. So it was a thank you that she sent me for doing those first few blockchain laws, for coming back home and helping. So as grateful as I am to be back home, it's really great to have those personal connections here. So all of you being here today just warms my heart in such a big way. Everybody in this space is working on adopting this technology. And maybe what I'll do is just spend 10 minutes or so talking about what I'm doing right now and how we can advance the ball, because I think some of you can deploy what we're doing right now. But then also, I'd just like to open it up for questions from you about where you think things will go. So Custodia obviously has been taking the arrows, actually not just from front, but from behind as well. It's really interesting how everything has played out. Someday when I write the book, I have sat on a couple of bombshells that I've not talked about. And those who know them are just stunned and shocked and saddened at how there's just a lack of rule of law in the United States and how much corruption there is in the United States. But it's not over yet, and we're not done fighting that. It took that, unfortunately. Tomorrow morning, I'll be giving remarks on debanking for a company whose board I joined that was directly targeted by the Biden administration. And the U.S. government effectively apologized to it and admitted to its wrongdoing. That hasn't happened yet among the bank regulators and those of us who were targeted for debanking. But the fact that it happened at all is a start, at least. So if you want to listen to those remarks, it'll be about 10 minutes long. The company asked me to speak on the topic, and I just joined the board in July. So I've only been on the board for a recent period of time. But during my due diligence, I uncovered, I had to look at what was going on, how the U.S. government was harassing this company. And it's now public that the investigation was dropped with the company was exonerated, but the admission of what the U.S. government did to this company is what's so stunning. And as a side note, just to give you a little teaser in case you want to listen in either to the live speech or the replay, Donald Trump Jr. joined the board back in December, so a few months before I did, and that caused the U.S. government, because of course it was still under the Biden administration control, to ratchet up the pressure, and it was incredible. So I'll talk a little bit about that tomorrow. I don't want to be political, but it's so, having been on the receiving end of this, trying so hard not to be political, it's really tough when you see just the incredible wrongdoing. And I alluded to this earlier, that we learn from insiders. As time has gone on, it's become very clear that what happened to Wyoming, we got really screwed by the powers that be in Washington, because we were so far ahead. And now, obviously, with everything that among the financial institutions, New York has caught up, right? Wall Street has had 5 years to catch up from where Wyoming was. And we found out from insiders that the first insider came forward to me the weekend after Custodia got denied, and this was a Senate-confirmed Biden appointee. Okay, so just to give you some sense of how many good people there are on the other side of the aisle, there were a lot of people who were not comfortable with what the Biden administration did to this industry, and he started to reveal to me the extent of the wrongdoing. And at the time, it was very confusing because this whole concept of Operation Choke Point wasn't in the vernacular, and it was, at the time, it just didn't seem something didn't sit right. But it's with the benefit of time and with more insiders having come forward, we now know just how corrupt it was and how crazy the whole situation was. So I don't know where this is going to end, but I do know that Wyoming still has some degree of a lead, and we will hopefully be able to capitalize upon that. How is what I'm talking about relevant to all of you? If you're not worried, if you're not working in these special purpose depository institutions and you're working in the industry in and of itself, the answer is that the Genius Act really did change everything, because ultimately, what is money? Money is speech. Right? We passed one of those 56 laws is a code of speech law that protects the developers who write code from being criminally charged if somebody uses their code in the commission of a crime, and it wasn't them who wrote the code to be used in criminal manner. And boy, have we seen that at the federal level. Some developers have been persecuted for writing code and how others have used it in the commission of crimes. But what we would like to do as an industry is get to the point where there's some foundation of the freedom of exchange. And that is ultimately what this technology brings us, is the ability to have peaceful exchange, peer-to-peer if we want to, self-custody if we want to, using an intermediary if we prefer, because of course there are, as you were asking about the wallets earlier, there are things about the wallets that are, and the self-custody, that are scary. We, of course, concede that. It's a lot less scary than it was in the early days before the BIP that allowed us to have our 12 or 24 word seed phrases. Back then, it was even more complicated. And then, the ledger devices and Trezor devices came along, and, now there are a multitude of options to help us with self-custody. But the aha is that we all have the option to actually take our crypto into self-custody. That is what protects us. Now, we will continue, of course, to be able to use exchanges if we want to, or use intermediaries if we want to, for convenience. But it's ultimately the fact that we can take it into self-custody. And the analog to analog money is literally stashing paper, $100 bills in your mattresses. I guarantee everyone in this room has had relatives who have done that. I certainly have, and that's what gives you the ability to protect the fruits of your labor. The problem is, of course, that with centralized currencies, as we all know, that the value is diluted. I saw an interesting tweet today. Just sitting with fiat is a 5% wealth tax every year, because that's what inflation is. And so that's why we're bringing alternatives. Now, getting back to answer the question, for those of you who are building cool things and cool applications, this is application day. At the end of the day, there is a financial exchange that takes place on pretty much every transaction, whether it's track or trace, or whether it's a registration of a real world asset on a blockchain. There's still got to be a monetary exchange. There's a money leg to every one of those transactions ultimately. Maybe not in the beginning, but in a chain of transactions, there's going to be money changing hands at some point. And that's the foundational layer. That's what we're really playing for, is the ability to have those take place in Wyoming with the protection of our property rights laws. Very few people even, I think, understand the nuance of what Wyoming has created in having the ability for you in a Wyoming, if your intermediary is a Wyoming special purpose depository institution, you have the ability to have that asset continue to be yours in legal title. That's not true anywhere else in the country. What do I mean by that? The best analogy is valet parking for a car or a coat check. When you valet park your car and you get that ticket back from the valet, you have not given that garage legal title to your car. All you did was give them temporary possession of your asset. You still own the legal title to that car. Same thing with your coat. That's the exact same law that we've applied in Wyoming. If you're working with a Wyoming special purpose depository institution, or even the trust companies here have the ability to offer what's called bailment. That's the legal term that describes where you give temporary possession of your property to a third party, but you haven't given them legal title. Every other financial intermediary in the United States is set up the other way, where when you give them your dollar of deposit, your security, your gold bar, your Bitcoin, anything, you're giving them legal title and they owe it back to you. So you're creating a debtor-creditor relationship. That is how it works with every financial institution that is not a Wyoming one. So I think that there's going to be a renaissance in all this, and I would encourage you to really think as you lay out your applications and all these very cool things you're all doing with this powerful technology, especially the non-monetary uses. So at some point in your value chain, there's money changing hands. And the more that we can get that respect for property rights built into what you're doing, it respects the ethos of blockchain, and it helps Wyoming, and it helps get more assets into this state where the leadership has really taken place. And I would just encourage you all to think about working with Wyoming companies. There will be, obviously the Fed kind of attacking us, set us way back. I've hit F9, I don't know how many times today to check to see if the lawsuit decision has come yet. It has not. The median, by the way, in case you're wondering, the median expected time would have put the decision in mid-May. And it's the end of September. So as you can imagine, I'm checking, hitting refresh multiple times a day, waiting for that decision to come down. So we'll see when it happens. We'll react to it when it does. But I still think that the future is unbelievably bright. Just wait in Custodia's case till we can announce what we're about to announce. We're working with banks. Some people might look at that and say, oh my gosh, why are you working with the banks? Just wait until you see what we're doing. It's actually the right thing to do. And I'll close by saying, some folks think that the financial system will just, collapse and we should just go to a peer-to-peer system and go to a blockchain-based system overnight. I don't want to live in that environment. I don't wish that on my enemies either. That is not a stable environment. We're much better, as Saifedean Amos and I had a debate back in, I think, 2017. Is the system going to end with a bang or a whimper? I think it's going to be a whimper. I think people are just going to be voting with their feet. We already saw it. I mentioned it yesterday when I updated some market data that stable coins, the transaction volume annualized of the last 30 days for stable coins is 63 trillion a year. And ACH it's actually current quarter annualized is 93 trillion a year. So the stable coins are already 2/3 of the ACH system. It's that big. Now when I tweeted that out, folks rightfully came back to me and said there's a lot of wash trading in those stablecoin numbers, and there's some reliance on exchanges to self-report. And how do we know that's real? And I concede all of that. The data reliability in that number is not as high as the data reliability in the ACH data. But it almost doesn't matter because it's just the fact that we're even having the conversation about how far we've come in this space in such a short period of time. The direction is obvious. This is all going to be taking over, and so just keep going. We are absolutely in the right place. This state was right for sticking its neck out. This university was right for sticking its neck out, and I think it will all It will all pay off for the state in the end.
All right, I'm going to ask the first fundamental question. You had talked about Operation Choke Point 2.0. You had talked about the negative approach Washington has had for as long as we can remember on this industry. Why? Why did not the U.S. just say, we are the financial leaders of the world. We are going to continue to be the financial leaders of the world. We're all in.
Well,
Why?
look at Secretary of Treasury Scott Bessent. That is exactly what he is saying. So the wrong people were in place. And I also am alluding to, when I say that, I'm not pointing fingers exclusively at the Biden administration. The first Trump administration had some very anti-crypto people, including the Secretary of the Treasury, Mnuchin. And the then head of the FDIC, she has definitely, Yelena McWilliams, she has definitely come around to being pro-crypto like everybody does. By the way, everybody, when you first saw this, probably was skeptical of it, myself included. And President Trump, Lord, he was very anti-Bitcoin at the time. There was a big, long tweet thread from 2018, 2019. I engaged with him on it. He didn't respond, but the industry kind of piled on with my thread, engaging with him back, and he changed his mind. Part of what caused him to change his mind is that he watched his family get targeted, and that's just wrong. And he just is having a visceral gut reaction that I hope every law-abiding, well-meaning American, regardless of political party, has. It's wrong to use to use access to the financial system to debank a political enemy who's law-abiding. It's just wrong. And it unfortunately it happened. And it happened more to one side than the other. And I am also taking the stand. I don't want this side that's in control right now to pursue the eye for an eye approach. It's wrong to use the financial system to debank political enemies, regardless, as long as they're law-abiding. The ones that are not law-abiding, different story. But the law-abiding ones absolutely have a right. I do believe financial services is speech. I know that's not how the court system looks at it, but I think philosophically it is. So back to answer your question, didn't have the right people. There's also, let's face it, there's a generational aspect to this. There's no question that you see it in the surveys that this technology adoption skews younger. So by birth year skews younger. And the Paradigm survey that came out recently was fascinating. It said that in the 18 to 24-year-old demographic, people are getting crypto wallets before they get bank accounts. I'm not sure in that, if you skew even younger than the 18 to 24 demographic, I'm not sure that very many people who are now, age 10 will ultimately have a bank account at all in their lives. And most, you say that you ask your students to raise their hand if they've been in a bank branch, and nobody ever has, right? Yeah. So, I mean, it's just, there's a different experience for sure. As I see all the bank branches keep opening in Cheyenne, they're building another new one right next to the hotel where Amanda was staying. We drove by it this morning. There's another bank popping up in Cheyenne. Why are people building this infrastructure? Because it's not to serve the 15-year-olds. It's to serve folks who are used to doing business in the banking system face to face, and that is definitely changing.
Predictions. Okay. I'm giving you a magic wand. Look out 6 months to a year. What do you think will change most in our lives?
AI. Yeah. If you're not actively using it every day, boy, it will change your life. It will make you more productive. It's no secret that Custodia had to lay off, and we refunded customer funds because we just kept getting debanked after the fifth time, and it was clear that the sixth one was coming. And none of those were due to anything that we did wrong. We were just being targeted and stop and think about the logic of it. If they were able to bleed us dry, then the lawsuit would go away, right? Think about the ethics of what the Fed did to us there. But it happened. Welcome to the United States of America. But long story short, the reason I brought that up is I asked our head of engineering, how has AI changed your day-to-day? And he said he's at least 25% more productive than he was a year ago. Yes. Thank you. That's a really good question because because your bank cares a lot about it. It's so interesting, Travis. The Kraken Financial and Custodia are really truly friends. We're not frenemies because we just don't. Even in our original business plan, just had very little overlap. But it matters a lot to your parent company, Kraken, of course, of which, full disclosure, I've been a shareholder for like 10 years. But it matters a lot to you because the main business of Kraken is the exchange and the futures business and the like. So the Clarity Act matters a lot. For Custodia, by contrast, the Genius Act was everything for us. There's nothing in it for Custodia in the Clarity Act. So I can sit back and just watch, which is interesting. And I'm watching the fights in this industry between the different factions who want different things. And the banks are making a big run. I was just literally, before I came over here, putting a decision tree together for the banks. The traditional banks, of which there are 9,000 in this country, 9,000 banks and credit unions. The top 50 tend to have they're a pack. They even have their own payments clearinghouse. It's called the Clearinghouse. They have their own private versions of payment systems. And then all the other 8,000, 950 banks and credit unions work with the Fed. But so there's a thing in the banking industry where the big banks and the little banks don't trust each other. The littler banks, some of them are quite large, and there's a history of it, by the way. The big banks tried to do antitrust things to keep the little banks out. There were DOJ antitrust investigations into the banks in the 1970s because they tried to kill competition by keeping competitors out. Sound familiar? But the reason I bring that up is that the banks are making a big run to overturn some of the things that were enacted into law in the Genius Act. You're seeing it especially in the ability to pay interest on stable coins. And a lot of folks are, it's kind of funny. Everybody in this space understands that rewards are a yield on stable coins. You darn well better not call it interest on stable coins, but rewards, right? So a lot of the companies in this space are paying rewards on stable coins that have a yield, and they're advertising that yield, and that's got the banks all up in arms. So is there a chance that the banks are able to overturn something? They want to protect their monopoly on being able to pay interest on deposits, because that's in the Genius Act. There's a clear delineation. Bank deposits can pay interest, stable coins cannot. The issuer cannot pay interest, and so they're making a run at that. I don't think that's going to be successful. The Trump administration does not have a lot of patience for what happened for the banks right now, because the Trump administration, I think partly incorrectly, blames the banks for all the debanking. I've been on that side of it, and I understand exactly how the power was exerted on the banks. And I like to quote Tyler Winklevoss on this. He uses a mob analogy. It's, hey, you got an awfully nice bank there. It sure would be sad if you didn't close this person's account. That is exactly what happens. And of course, it's not in writing. It's, for the most part, it's all verbal. By the way, the FDIC settled a lawsuit for Operation Choke Point 1.0 and agreed to put it all in writing, and then didn't put it in writing. Okay, so I think there's a case to be made for criminal contempt of court against the actual individuals at the FDIC for that, because they had notice that they had settled that lawsuit and agreed to put all that in writing, and it's clear they didn't put it in writing. So, but yet it's clear nonetheless that it happened. So I'm not sure how that's all going to play out. My guess is that the banks will not prevail, and that the Genius Act will stand. But how the internecine battles between the crypto companies over some of the details on securities versus non-securities, how that plays out, I don't know. The most interesting thing, and I will make one prediction. I saw a speculation that they might put Paul Atkins, the current SEC chair, in as acting CFTC chair. And I think that's going to happen. Not because I'm taking sides. I just think just go look around. Scott Besson gave a half-hour interview on Maria Bartiromo's show this morning, and he pointed out that he's the acting IRS commissioner. Well, he's also the Treasury Secretary, right? That the head of the Office of Management and Budget is also the acting head of the Consumer Financial Protection Bureau. A lot of people in the administration have dual hats, and it's designed to try to. I think Trump has made no bones about that he wants to restructure some of these entities. And there's been historically a big push to try to bring the SEC and CFTC together. Some of you who are not Americans wouldn't be familiar with this crazy structure that we have with all these disparate federal financial regulators, all of whom are constantly fighting with each other and hate each other. But then they hated us more, right? But there's a lot of desire to consolidate those regulators. There was even at one point some discussion whether Scott Bessent himself would become Fed chair. He's now taken himself out of contention, right? But Steve Myron, who was just confirmed by the Senate and joined the FOMC meeting last week, has not resigned his White House post. He's the head of the Council of Economic Advisors, as well as a Federal Reserve governor. So there you have it. There's precedent for this. And some of it is just that the Trump administration wants to just sort of shrink down the number of agencies and reduce the attack surface by the regulators who have abused their power. And again, when you hear my speech tomorrow, just put yourself in Don Jr.'s shoes when I lay out what happened and how that company was targeted because he was added to the board, and that might add some context for what you're going to hear as Trump tries to consolidate some of these regulators. Yesterday, also there was a discussion about what's the political affiliation of the regulators. It's a fact that 92% of Federal Reserve staff donations went to the Democratic Party in the last election cycle. And it's been over 90% in the last several election cycles. So that gives you some context as well for, we're not looking at 50-50 type agencies here as well. And that's also part of what the Trump administration is up against.
Okay, questions? Yes.
Hi, you and your colleague, it's taken 5.5 years, but I now think there's something to all this crypto and blockchain.
Yay!
So thank you very much.
Terrific.
My work is done.
So, you'll correct me if I'm wrong, but say Tether, maybe the valuations of these other stable coins are around 100 billion, and they're often offshore, and their audits are questionable or not present at all as far as what they're backed with, where Frontier Coin is transparent, backed with treasury bills and that sort of thing. If Frontier Coin, say, takes $10 billion of that market, what will be the annual expected yield back to the taxpayers of Wyoming?
That's a good question. I have not delved in deeply into that project. I'm not part of it. Some have seen my tweets. I'm definitively neutral, which you can kind of read through. I'm not a fan. I actually I like the Hayek quote of, we got to get money out of the government's hands because the government tends to screw it up. And I will be quoting from Hayek tomorrow. But right now, if you just look at where yields are, the gross yield is 3.25, just putting it in T-bills. And then I'm not sure what expenses are going to be subtracted from that gross yield, and then how much, if any, is going to be paid. One of the interesting things about the state's stablecoin is that it's not, according to some, subject to the Genius Act restriction prohibiting the state from paying interest on that stablecoin, right? So, and then now step back, and there's some Wyoming constitutional issues related to that because the state is not allowed to compete with private industry. But so the banks are not wrong to be up in arms about that, because if the state can pay yield on the stable coin, then they're competing with bank deposits, right? So far that hasn't been litigated, but where I'm going is you subtract the expenses, and then the rest goes into the state's general fund, which is what the state is trying to pursue.
If I can jump in, I think conceptually the idea is sound. You were going to invest. We're gonna as people buy frontier coins, it will be invested in treasuries. But we are in a environment right now where treasuries are falling. I think, didn't Donald Trump call for a 300 basis point?
He's not going to get that. He's bracketing the negotiation.
I get it, but that's where that income really comes from. And Caitlin, I think, made some great points about yield. But look, it's an interesting experiment. I'd like to see how utility grows. I think, our esteemed representative will probably agree with my next statement that there's nothing unconstitutional about passing an unconstitutional law. So, so we'll have to see how this all plays out. I think it's a wonderful experiment, and I am pleased that Wyoming has done it first.
Yes,
I think that is it continues to just show how innovative our legislators are, and that we're willing as a state to do things unique and special. Over time, though, we're going to have to see. Expenses will be high, yields are falling, and utility, at least in the short term, will be a challenge. And what I mean by utility is, what are you going to use it for? Are you going to be able to walk in right now and buy a Big Mac fries and a Coke? Well, not today. But is that 3 months from now? Is that 6 months from now? The utility is going to drive some of that. But again, I think it's a novel concept. We've done some research at the CBDI about profitability of it, and it's tough if you're just limited to treasuries. But we're going to have to see how that plays out over time. I will tell you, the goal of any proceeds going towards education, I think is positive as well.
Is laudable, yeah.
Yeah. So again, I'm a supporter of it, watching from a distance. And we were, CBDI was pretty involved early on in helping identify utility, and until the staff was able to get up to speed. So we're certainly proud of that involvement. But time will tell on that one. The stable coins that exist right now that are air quotes profitable are allowed to invest in other things than treasuries that bring in greater yields, which allow them to be more profitable than the way the legislation, if I'm correct, is written.
It's higher risk.
It's still limited in what the
to treasuries.
to treasuries, right? So we'll see. I think it's we'll see. Kind of the best I think we can call on that. All right, more questions? Yes.
So 2 questions for you. Obviously, I'm very supportive of Wyoming putting out a stable coin. But is this really not just you being in front, but also trying to push back against the Fed, essentially doing the same thing? If they do push out a stable coin, what's your perspective on in some form through the Fed? That number one, sort of what's going to happen, just your prediction. Number 2, I have kids which are all below 18. I have 4 of them. And what I see is the financial industry, the banks and whatnot, pushing in with things like Venmo and whatnot, and almost as a counter to the peer-to-peer payment systems.
Mm-hmm.
And so again, I'm just also wondering if you feel like that's a backdoor to avoid, I guess, the next generation from utilizing these tools.
Yeah, great questions both. So I'll start with number 1. The history of the stable token is that when the Wyoming Speedies got blocked, we were going to be a pretty decent sized revenue stream to the state's general fund. Let's step back. What's the state really after here? Mm-hmm. It's after funding the schools. This state is very energy intensive, which means it's boom bust in its general fund revenues. And the state constitution has a provision that says that all students in Wyoming must have an equal education opportunity, right? So someone in Jackson Hole in the highest paid zip code in the country versus somebody in the middle of a rural area, the education has to be the same pursuant to the state constitution. So unless the citizens of Wyoming get together and change that, that's what the legislators have to solve for. And they've been dealing for decades, really. I mean, I'm 56. My whole life, it's been just up, down, up, down, up, down. And this this university is a land grant university, and it goes through boom bust cycles, feast famine cycles as well. And so as a state, we're just trying to solve that. And one of the biggest fears, I think it's less so today, but certainly a few years ago when this was all starting, was that coal wouldn't come back. Now, with all the AI, just insatiable energy needs, you're seeing that it is coming back. But unfortunately, as Holly Krupko was saying yesterday, that the School of Energy Resource dean, that a lot of the coal companies that were here 10 years ago have either gone under or restructured. They're gone. They're not coming back. So how easy is it for the state to recover those revenues? Okay, so that's the backdrop. So the Fed stymies the whole initiative by blocking Custodia, and so the revenues are not coming in from the speedies. So what did the Blockchain Select Committee do? They said, screw it, we're going around the Fed. That's exactly what happened. That was the impetus of this whole thing. And so I don't disagree
I think Senator Rothfuss wanted a fight too.
He wanted a fight. He was hoping the Fed would sue the state and get into, and by the way, that still could happen, right? I mean, there's some ambiguity there as to on the constitutional side. So just, I think more power to the ornery Wyoming legislators. I've told a couple of fun stories about yes, I see Representative Singh put it with his fist in the air. I love it. Not being afraid to ruffle feathers at the federal government. And from that perspective, I absolutely support the whole initiative, because it was basically the state saying to the Fed, if you're going to block our economic development initiative, we're going right around you. And look what's happened. The whole stablecoin thing is going around the Fed. It's a U.S. dollar payment system that doesn't have to go through the Fed. Every other U.S. dollar goes through the Fed, and ultimately everyone still does at the end, but it doesn't have to go through the Fed as an intermediary. So that's the first question. And so and just for the second. Yep. Will the Fed have a CBDC? I mean, I do trust Jay Powell in this one regard, limited trust. But in this regard, he did say that he is not going to issue a CBDC without Congress approving it. And so, and I think whoever replaces Jay Powell that's probably a litmus test, I would guess, that Trump is going to ask them when he interviews them. This morning, Secretary Besson, who's doing the interviews for Fed chairs as we speak, said that he's expecting to narrow it down in early October, and then he'll have another round of interviews.
But I'm worried about 3 Fed chairs for that.
Yeah, I mean, yes. Let's put it this way. When Secretary Besson put out his Wall Street Journal op-ed saying that the Fed just needs to be massively reformed, I'm a huge fan of Secretary Besson. He's just phenomenal, and he is going to get his way, I believe. And to be honest, and he's fully aware. I've met him before and had subsequent conversations. He's fully aware what the Fed did to us, and fully aware of the bombshells that I've not talked about publicly too. So, Godspeed to him fixing it. It needs to be fixed. But there was a second question, and I forgot. Venmo. Yes. Okay, so Venmo is actually a fintech. Yeah. Venmo's owned by PayPal. So here's the interesting thing: people use it as peer-to-peer, but what happens behind the scenes is still that horse and buggy. Yeah, exactly. And so it has to still clear through PayPal's bank, which is they were using, I think, Silicon Valley Bank, Cross River Bank. I mean, some of these fintech-oriented banks, right? So, but now there's something, it's fascinating what's going on. Some of the fintechs are applying for OCC trust companies and Fed master accounts because the banks got so much pressure to close their accounts. there was a very large fintech, I won't name it, who came to Wyoming and they wanted to talk to me about getting a Speedy Bank charter as a fallback in case they kept getting debanked, because in order to be a participant in the Visa and MasterCard network, you have to have a bank sponsor. And they kept getting debanked so much that they thought this was existential to them. They wanted to have their own bank who could make them a sponsor to make sure that they never lost access to the Visa and MasterCard network. Folks, that is how bad that Biden administration cracked down on all things crypto, but all things fintech, but especially crypto was. Okay, so they're all now grateful that that pressure is off. But again, they're going to do it again if they get back, when they get back in power. If these tools of the pressure that were applied haven't been completely unwound.
Or unless we, use this opportunity to build out a new framework that can't.
Yes, which is what Secretary Besson is all about. I heard a rumor, and to be clear, this is not coming from him. I heard a rumor, but it's credible, that the U.S. Treasury is looking at issuing tokenized T-bills. If you step back and think about the implications of that, a tokenized T-bill is a U.S. dollar that pays interest. So all of a sudden, guess what? The U.S. Treasury can circumvent the Fed, just like the state of Wyoming with the stable token circumvented the Fed. Okay, so Secretary Besson knows exactly where and how to apply levers of pressure to get the Fed to back off some of this stuff. So what it looks like in the next couple of years, I don't know. All I do know is Secretary Besson gets it. His job is to protect the U.S. dollar system so that, we don't live in a collapse. But when you listen to him, he's a big fan of Bitcoin and a big fan of gold. He is no rah, nothing but the U.S. dollar at all. He is absolutely managing all of this. And stable coins, let's face it, huge invention. It's the killer app so far for the crypto industry so far. And I give Tether credit because they had the foresight to create that technology, and it has spread like wildfire. But they've also figured out, really importantly, how to extend the U.S. dollar's reign as global reserve currency by bringing in. They have, at last I looked, 460 million active users, 460 million monthly active users of Tether. And it's a lot of people who might be in, places that don't even have electricity. And Tether built a distribution system so that people can swap the batteries on their cell phone. And when they come to the kiosk to swap the battery on their cell phone, that's when they deposit their earnings, and they're depositing them in Tether, which is U.S. dollars. And that is not a price sensitive buyer of T-bills. They are not going to, in the next financial panic, they're not going to panic sell. That is of extraordinary value to the U.S. government, and Secretary Besson understands that.
Representative Singh?
I just wanted to chime in a little bit on the central bank digital currency and just fears about that on the federal level. Something we passed in the state of Wyoming this last session, where the state agreed that we would not participate in any sort of program like that. So if you're from a different state, you can, if you're concerned about that, you can push for your legislatures to also do the same thing. It's been done in other states in the country, like Florida and Indiana. But there are ways, just how with the experiment of the Frontier token, we are circumventing the established authority in this way. There are ways to push back on a central bank digital currency as well.
Perfect. And by the way, that's why what I really like about Representative Singh is he believes in the 10th. He believes in the 10th. So
the 10th Amendment, which is that all the powers not expressly defined in the U.S. Constitution belong to the states.
Hey, a couple more questions? Yeah.
How are they different from a CBDC?
Good
question. Treasury is basically a dollar.
Yeah. That is, you are absolutely right to observe that might be viewed as, or used as, or abused by. Again, you said, 3 Treasury secretaries from now.
Let me jump on
that.
And I think, to me, it comes down to, is it a wholesale use or a retail use? A wholesale use, if banks are using tokenized treasuries to move value between banks, I'm going to be honest with you, I don't think I care. Banks are already reporting everything involved in those transactions to the government. I don't really care. Where I start to get nervous is the Big Mac fries and a Coke. And if it's brought down to a retail level, then I start getting nervous about the Fourth Amendment. I'm going to say an absurd statement, but how likely is it that the government is going to go to a judge to compel the government to release government information to the government? It's absurd. Right now, our Fourth Amendment gives us protections where, a judge is going to have to say, yes, there's something here, and a bank is going to have to say, yes, I think we should, we should honor that warrant. So for me, it comes down to the utility of it. If it's retail, you know what? I think retail needs to go digital, but I think it needs to go digital through fintechs and banks. And wholesale, I'm more ambivalent. I don't care about that. So I do think there is a difference, and I do think it comes down to utility. And where I think we should, the hill I'm willing to die on is I don't want the government involved in a retail payment. Am I close?
Yes, but it was very prescient of you to make that connection, because historically, if you read the U.S. Constitution, there are a lot of people who think the Federal Reserve is unconstitutional and that Congress did not have the right to delegate the authority to a fourth branch of government, an independent agency. That's all being litigated as we speak. Mm-hmm. Are these independent agencies even constitutional at all?
Remember, there's nothing unconstitutional about passing an unconstitutional law.
Right. It's got to get deemed unconstitutional. It might take more than a century for it to happen, but it still might happen. For these independent agencies, the Supreme Court's being pretty clear. They're pursuing that decision that the U.S. president. There are three branches of government. There is not a fourth independent agency branch of government, and so as a result, this is a lever of power that the Treasury has over the Fed, because the Fed is being. I mean, let's face it. It was until last week 5-2 anti-Trump on that board, and now it's 3-4. So Trump's got 3 votes but 4 against him, and so they're being a thorn in his side, not just on setting interest rates, but on all this regulatory stuff, which is, again, where some of the really bad stuff happened. This is not an agency that has complied with the law. And again, some of the crazy things that happened to us, there's this FOMC blackout period is supposed to be sacrosanct, right? The Fed does not give interviews during an FOMC blackout period. Did you guys realize that the denial of Custodia happened during an FOMC blackout period, and the Fed was talking to Bloomberg during an FOMC blackout period? And we filed a complaint with the Inspector General, who, by the way, reports to Jay Powell, and it's, in other words, the very people who were being investigated. But then a major financial reporter told me that the general counsel of the Fed is the biggest leaker. But he's the guy who's supposed to be enforcing the policy that nobody leaks. So, when this is what you're up against, right? I mean, how does Trump get? I mean, he's dealing with people who have gone rogue, and how does he get the Constitution to be respected again? It's a very interesting question. Now, it's always going to be a debate. Should the government be in the business of money? And some would even say it's not even just that the Federal Reserve was unconstitutional, the dollar itself, because it's defined in Article 1, Section 10 of the U.S. Constitution. And that is the only thing that can be the U.S. dollar. And so you cannot issue an IOU to that. It's literally got to be what's in Article 10, or Article 1, Section 10. So we're into some really esoteric areas of the law, and I would guess that this is going to be litigated in the next I don't know how many years. It's not being litigated yet, but you're absolutely right. Very prescient to make that connection that a tokenized treasury is not that different than a CBDC. Mm-hmm. But on the flip side, this is also one of the levers, because let's face it, Fedwire is the system that handles high-value payments in the United States. 1.1 quadrillion of high value payments went through Fedwire last year. If there are tokenized T-bills, do you really need Fedwire anymore? Is that one of the ways that the Treasury Department gets control over this rogue element at the Fed? Correct. And again, Besson's I consider him one of us, right? His job is to be the Treasury Secretary, but go back and look at the interviews he gave before he became Treasury Secretary. Big fan of Bitcoin, big fan of gold, very much concerned about currency stability and instability thereof. Yeah.
Well, I want to thank everybody for attending.
Yeah, this was great.